good. Just give me a second. Okay, I'll just go through what we're going to discuss in this session. So I'll just go through my journey to naked charts. I'll just briefly, talk about the fifth golden zone, which is what I trade 90% of the time. My entries, stop loss, and take profit. I'll show some examples as well, and then I'll go through some of the advantages and some challenges of this model, and then Q&A. Yeah, so it's not financial advice. Like I don't even have a background in finance, so please don't take any of my advice before you backtest or you do your homework. What I'm going to share today is just based on my personal experience in the last 2 years of trading. All right, so we can get started. So my journey to naked charts started with stocks about 2 years back. I was in BBT. I was just doing what everybody else did, like just find stocks and scanners, try to catch the opening breaks and things like that. But none of it worked for me. Like I didn't have that conviction for any of the strategies or trades that I took, right? And I had a lot of indicators, VWAPs, EMA, pivot points, all of those, and it was all confusing to me because sometimes the price comes to VWAP and I think, oh, it's going to bounce, right? The EMA's crossover, and I think, oh, okay, maybe the price is going to drop or go up, and the Camarillo pivot points and all of those things. It kind of confused me a lot. So then that's when I really liked how Avi traded with the Fibonacci levels, because there's no indicators. It was just levels based on levels, and then I started trying to trade the Fibonacci levels, and it worked for me. It was much better than using all of these indicators, right? Um, and so after trying Fibonacci levels, I was trying to see how I can make it more simpler. I mean, Fibonacci levels were good, but the only thing was like there were multiple levels, and I didn't know at which level the price was going to react. Was it going to break out, or was it going to reverse? It was a bit confusing to me in that aspect. And it was easy for me to overtrade or revenge trade because the price comes to a level. I think it's going to reverse. It does not reverse, and it keeps going, and then it comes to the next level, right? So I think, okay, maybe now it reverse, so I take another trade. So it was easy for me to like overtrade and revenge trade as well, and that is when I thought, okay, maybe I should like simplify that as well. So then I started observing the Fibonacci levels for the 50% retracement. And I really liked it because the reason I liked it because it gave me a clear and precise entry. If the price comes here, I know what I do. If it doesn't, I don't take a trade. So that's how I finally understood that less is more. Again, so I stick to the Fibonacci strategy that I use, and I will talk about it more in the coming slides. So yeah, my journey started about 2 years back. Started with Sim. Then I tried a small account. Mm, I blew up. I didn't blow up the full account, but I was down. I think about 5K, and then I stopped trading my personal account. I was like, I cannot keep doing this, right? Because you don't want to risk your hard-earned capital. And that's when I learned about futures trading, and then I learned about prop firms. So I right now I only trade prop firms, and I think I'm happy doing that because I don't want to risk my own capital at this point. With prop firms, you get really good drawdown for a very less price, and you can actually earn good money. So yeah, that's my journey, and yeah. So right now I do trade full time. I used to work until last year. I think it was April last year, April 29th. I remember. We had a huge trade. Like I think in one trade he made about 200K, right? Um, Trading options, I think SPY. It was SPY. So at that day I realized, that was like almost twice of what I was making in my full-time job, right? And to see RV come and make such a big amount in a single trade, that was something for me. I was like, what am I doing? Like, that was an eye opener. And then from that day, I started planning on how I can, switch to day trading full time. I took the risk last year, and then now I trade full time. That's that's about me. So I'll move on to fifth golden zone. So there's um, two different charts that you can see here. Um, all right. So this one is when the price goes down, right? Like it's trending down, and then it kind of retraces to the Fib golden zone. It just kisses the Fib 50%, and then it drops, right? And this one, this is for the opposite direction, the same thing. The only thing that you need to be careful about when you draw these levels is you want to make sure that the 61.8% is above the 50% when you draw it on the downside, because you don't want this line here, you don't want the 61.8 to come to side, like you don't want to draw like this for this, because what this means is the price came all the way here, and this is a 50% retrace. So if it retraces more, it goes to 61.8 and then it drops. Okay. If you draw the line in the opposite way, 61.8 comes here, and that messes up your golden zone. So that's the only thing, I want you to be careful when you draw these levels. Basic thing, but sometimes when you're trading it, you might end up drawing it in the other way around, and can get a bit confusing. So make sure you draw it this way. And this is the golden zone that I'm looking for price to come back, a retrace, and I look for price action at these zones, and then I decide where I want to enter. So if I'm entering here, this is my stop loss. Ideally, I target the low of day or high of day. Sometimes it even breaks. I look for ads as well. But that's pretty much it. Like this zone is my entry. At the other side, the opposite side is my TP. And then you know, take profit can be um, up to you. Sometimes it does break the level, and sometimes the price tend to bounce back. So if it comes here, I do like to take some of my contracts off. But again, if it breaks and then bounces back, I will add. So that's about the golden zone. So there's two models that I want to talk about that I trade. Both are based on the fifth golden zone. So the first model it's a bit faster, like in terms of price action. It needs a fast entry. But the good thing about the first model is that I know a fixed time frame of where it will happen. So it usually happens between 10 a.m. and 10:30 a.m. Eastern. So how it works is, you wait for the first 15 minutes of the New York session. You wait for that 15-minute zone to break. It need not, break and go far in one direction. It just need to like break so that you get a direction. Once it breaks, you want to wait for the 15-minute uh, you know, time frame to just come and pull back to the 50% fib zone. So it breaks the 15-month zone, comes back and kisses the 50% fib level, and then it bounces from there. So that's what I'm looking at. That's the first model. The second model is my favorite one, but it doesn't happen every day. Maybe on a good week, it happens two times a week on average, but 1 to 2 times. But it's a high probability setup, and I like the second model because it's a similar model, like 50% retracement. But why I like it, because it's more slower paced, so you have more time for entry. It happens anywhere between 11 a.m. and 2 p.m. So in general, I like things slow. I like slow mornings. I like slow cities. So I like the second model because it's slower. It gives me more time to think. And usually when I go for the second model, I size a bit more heavier because I have more clarity on the price action, and I have more time to manage my trades. So yeah, so these are the two models. So now I'll show some examples of the first model that I'm talking about. So this is model one, right? All the examples I'm going to show just happened. 90% of these examples just happened in the last month, or even in the last few days. Very recent examples, but this happened all the time. Like I've back tested last year as well data, and you can go ahead and do your back testing, and you will see these setups happen all the time. Maybe not every day, but then if it doesn't happen, you don't take the trade. Like that's what I do. So yeah, so I'll just go to the example. So you see here, this was MES, right? For 5 minute chart. So the price breaks the 15-minute zone. It comes back, just kisses the 50% or the golden zone, right? You see that wick, and then off we go. So this is what I look for. Like every time, I want to see the price come down, kiss the golden zone, and then move back. These wicks, this is what I'm looking for. That's it, right? Sometimes you don't get it on the 5 minute, but if you do look at the 1 minute, 2 minute, you can see the price action with volume confirmation for your entries, right? Now, if there is no wick and if the body closed like right here, and that is a red flag for me. I will probably consider entering that, because if there's no wick and the price closes right here, there's a high chance that it can break this, right? So then I'll be very careful. I watch closely the price action 1 minute and 2 minute to see if the price actually bouncing back from this level. So yeah, if it's moving high, what I want you to consider the golden zone is it's pretty much like a support zone, right? When a price moves like that, it's very you know, especially when it moves very quick, it's very unlikely that it just breaks that and just falls. It does happen, but at that time you don't take the entry because it doesn't give you the wick or the confirmation. On the right side, you can see MNQ. That's a 1 minute chart. So again, if you look at it, like all these entries, like around 10 a.m., right? This one around close to 10 a.m., 9:50 to 10, or I think around 9:55. Again, what you can see here is the price breaks the first 15 minutes zone, comes back, and just kisses. You see that wick? I'm entering that, right? I like that wick, right? And I wait, once the wick is formed, I wait for the price to actually start moving in this direction and just enter there. And this is my stop loss. So you do get at least a 1 to 2 risk reward, but sometimes, you get like 5 hours, 6 hour trades from this. We can catch it early. Yeah, so the first model is, it's very quick because it happens around 10 o'clock, like 30 minutes of the open or 1 hour into the open. So the price action is very fast. You need to be really alert and watch for these uh, you know candlesticks to form, and then just take your entry and just put it stop loss there. So this is another set of example. This is very recent, I think yesterday, probably. Yeah. So the shaded region, this is the 15-minute chops up, right? The price just kind of chops. Now the price comes back, breaks the 15-minute range slightly, comes back all the way, just kisses. Now we see that wick, that once a wick is formed and the price starts going in my direction, I enter, right? And if it fails, it's okay. It's fine because you have your clear stop loss, which is like right below the 61.8% level, right? And then once the price just starts going up, there's a high probability that it breaks the high of day and just keeps going, right? So this was a good trade I had yesterday. I kept adding, and then I added some here as well. And then I took all of my positions at the new high of day level. Yeah. Another one you can see, the price breaks. This is a 15-minute high. It breaks, comes back. You see a beautiful candle here with that wick, and you see the volume on that, right? You see that volume on this higher than the volume of on any of these red candles, right? So this when I see this candle, I'm entering, right? I enter, I put my stop here, right? That's it. And then take partials or ads, or once it breaks, once it reaches here, I take some position, and then if it breaks, I sometimes I do add to see if we can get a better move on the upper side. So yeah, these are some of the examples. This is also a few examples for model one. The beautiful thing is everything, all of these, you see the time, right? Approximately around 10 o'clock. 10, this one, 10 o'clock, right? 10 o'clock, 10 o'clock, right? 10:15. So most of this happens, that time range, right? So I'm looking for these entries around 10 to 10:30. And if it happens, I take. If not, no trade. I wait for my model two, which I'll talk about later. So yeah, so you see that price breaks, comes back. You see that beautiful touch, comes back. Now this is the 15-minute zone. It breaks, comes back. It forms a beautiful wick there. Once it forms a wick, once the price starts moving up, I enter. Put my stop. That's it. All of these gives you at least 1:2 risk reward on a minimum if you decide not to partial to early. Yeah, some of these, yeah, it can go up to like 4, 5, 6 hours. This is a beautiful trade. Could have given you about, I think, yeah, 6, 7 hours. So these are some of the examples I wanted to share for model one. Um, Now this is a bad example, right? This happened today on ES. So if you look at this, so this is a 1 minute chart, right? You see the price broke the 15-minute zone, right? This is a 15-minute high. The price broke the zone. It came back, but you see how this candle closed without a wick on the 50% level. It just dropped like that, and you see that volume on that candle, right? When this happens, I don't take the trade because this shows me that the price is not ready to just bounce from the golden zone, right? So yeah, so you see that it comes and then once it breaks that 61.8, that's it. I'm not taking this trade. Even if it decide to bounce, I'm not taking this trade because I don't like the way it reacted at the golden zone. So this is a trade where I would not have taken. So it is important to understand the price action that happens around that level rather than just taking the trade because it's at the 50%. So not all trades you want to take. You just want to look at the price action, make sure it's clear enough for you to have that conviction. So these are some of the examples for model one. I will go to model two examples. So model two, as I said, it's the same concept. The only thing is it happens at a later time in the day, right? Most of these examples, like the setups, it happens when there's a huge move on the upside or downside, where it will not give you a pullback, a 50% pullback in the early time of the day, but it will come back late in the afternoon or late morning to give you that entry, right? So you look at this price keeps chopping around. It breaks, right? This is about 12 o'clock. The price clearly breaks the downside, right? And then it comes all the way here, I think around 2 o'clock. You see the beautiful wick, right? Like that this is my A plus setups, right? Now this comes here and then I don't enter here. Like I wait for this to just start moving on the downside, and then I put my on my stop loss. So ideally you want to put a stop just above the 61.8 because sometimes the price comes just touches the 61 level and just drops. But if I see a wick like this, and if my size is heavy, I just put just above the wick. Yeah. Look at this. This is another example. The price just drops. So the hardest part is when the price keeps dropping and you feel like, oh man, I should have entered, on the 5 minute ORB or a 15 minute ORB and things like that. But you have to stay disciplined because you wanna what you're trading, right? Like I know that if the price breaks, if it comes to the 50% level and it kisses that level, that wick, that's when I enter. That's it. So anything else, I should be just patient. That's the hardest part of the strategy, just being patient. But these setups, as I said, happen at least once or twice a week on an average. Okay, there might be weeks when it doesn't happen at all, and those are the weeks you don't want to trade if you're sticking to the strategy. So yeah, look at this. Look at this beautiful inverted hammer there. And once price start dropping, I enter, right? But this, like, again, like if this is a big massive move, right? If you're putting a stop loss above 61.8, that's a lot of points. So either you size down and you put your stop loss here, or if you're heavier on your entry, you don't want to put your stop loss here. You want to put it just above the wick. You want to keep it very tight. This is what I do if I'm entering with a heavier contracts, because I don't want to expose myself to such a big risk because this is massive, right? Compared to this is massive. So some things that you want to keep in mind. Some more examples from model 2, right? Price just keeps going, right? Comes back around 1:30 Eastern. You look at that beautiful tiny candle right there, just kissing the fib, right? When I see that, I like it. I'm waiting for my entry, and then the price just touches again, and then just boom, just starts going, right? And when it nears the high of day, I take my profits, right? For these setups for model 2, which happens later on the day, you want to take your positions off when it reaches high of day, because the chances of the price breaking this level is lower compared to model 1, because model 1 happens earlier in the day. There is a high chance the price breaks, but in model 2, this is gonna see, it's almost what, it's almost 3 o'clock, right? Market closes 4. So yeah, these setups I usually don't hold it longer than high of day, but these moves are massive, right? You if you get this good entry, like you're done for the week. Like some of the trades that I take, I have a good week by just taking one trade. So it just gives me like, you know, it just makes me realize that you just have to wait for a good entry, right? And these trades, if I get once a week, I'm more than happy, Like I've made up my mind that even if I get one trade and the whole month, I'm fine, right? You just have to size up accordingly. But like this works, right? For model 2, I've backtested last 1 year's data on NQ, like manually, and I've got a win rate about 85%, 85 to 90%, right? But again, I know backtesting is an ideal scenario. There's no emotions, right? So when I do backtesting, if I get an 85%, 90% win rate, I like to reduce 10, 15% of it in reality. So even if you get a 75% win rate, right? Worst case, even you reduce 10, 15%, that is a good win rate for these strategies for model 2, right? Look at this, like beautiful wick on the downside, right? When you sometimes like I also like trailing my stops, so this price comes back like that, I'm out, right? This gives two entries, like when you're like when look at this beautiful inverted hammer, and then boom, off we go. Like look at that candle, right? Look at that drop. So yeah, anytime the price drops like this, or has a big move, and it comes back to the golden zone, the price reacts. Like the price respects the golden zone. So what you want to do is you just want to look at the price action and decide taking entry or not taking entry. You know where stop is, and that's it, right? Again, so this is this massive new move, right? And if I'm entering heavy size, I don't want to put my stop here. I just put the stop above that wicking candle. That's it. If I get stopped out, that's fine. Sometimes I do get stopped out like that, but the price comes back again, and I see my confirmation. I enter again. No big deal, right? Because your risk is small. Okay. Some more examples here. So the price keeps dropping. Look at that drop, right? There's no pullback to 50% till the drop, right? And you're waiting. So the price comes back, just kisses beautifully. Look at those candles and look at this nice inverted hammer. And you look at the volume, like very low volume on that white candle, and then off we go, right? This was about 11:30, right? So these second model setups happen anywhere. It can happen anywhere between 11 to like 2:30 p.m. After 3, I usually don't like to trade these because after 3 there's a lot of uh, markets about to close and a lot of things happening. So these setups I do take around 11 to 12, or 11 to 2, or max 2:30. Yeah. So also, like, the best thing about I like about setups is, if I see the market drop like that, I put an alert. I put an alert somewhere around here when the price is closer to the 50% level on my phone. And when that alert goes off, I just come to my trading station and see, if I get a good entry or no. So I don't have to like spend my whole day looking at the charts. I put an alert on my phone. When the alert goes off around that level, I come and take the trade if there's. That's another good thing I like. So um, the hardest part is the FOMO, the discipline that you need to have to wait until the price comes here, right? you wait. This is about like what, 1 o'clock, right? Whole day you don't take a trade, and you might think, oh, I should have taken here. I should have taken here. It broke the pre-market low. It retested. I missed my entry. But no. You wait for that entry, and when you get it, you take it with conviction. So that's all I had for the examples. Um, I'll talk about a few advantages and some challenges. I mean, again, it's just a discipline issue that I see in this challenge. Other than that, it's great setup. The advantages, one session, you trade New York session, that's it, right? One pair, ESNQ or MES or MNQ, if that's what you trade. Just one trade, right? You get these trades, like one trade, that's it. Like, it can make your week, like, trust me. Like, you size it right, and you put your stop loss and let it play. That's all you need, right? One model, right? Very simple. You have a clear entry, you have a clear stop loss, clear take profit, right? Very less chance of over trading or revenge trading. That's one thing I really like, because I used to over trade a lot, right? Revenge trade, over trade, like, because like, I the thing is, it depends on your strategy too, right? For example, I used to trade like EMA crossovers before, right? So an EMA crosses over. I think there's a setup for me. I take the trade, I lose, and now I think, oh, okay, there's still time left for the market to close, so maybe the EMAs will cross over again. I take a trade again, and it's very easy for me to over trade a revenge trade. But with this strategy, you only get these setups like a few times a week, right? Forget about getting like 3 4 setups a day. So if there is a setup, you take it, and if you lose the trade, it's fine. You followed your plan, and you close your charts, and you come back the next day to see if there's a setup, right? This is very simple. Keeps you from over trading or reverse trading, and then knowing when not to trade, right? So if it's choppy, you can see that because you have your strict levels. You can see if there's a trend or if there's chopping. You don't trade, right? If the price does not come to your golden zone, you don't trade, right? Some days, what happens? The price keeps dropping, or keep going higher, and the price retraces, but it never touches the golden zone. And I don't take a trade, right? That's fine, right? 1 to 2 good trades a week. Yeah, as I said, that's all you need. So challenges, the discipline part, right? You have to wait. You have to wait. There's no other option. You cannot just go and trade any random setup or any other thing. If you are to trade this, you just have to trade this one simple setup. Um, the discipline is the hardest thing. Like, honestly, like, the strategy is simple, right? You can explain the strategy to a 10-year-old, and no big deal. Like, y- yeah, like, so I don't want to brag, but like, I've spent 6 years in the university, like ending up in a master's degree. Nothing has taught me to make like money in the most simplest way, as these fib lines have taught me. It's funny, like, so that strategy itself is no big deal, right? But you have to stay disciplined, right? You have to wait for your setup. So that's the most challenging part for this. That's all I had. Like, it's very simple. Like, it's not complicated at all. You have any questions, thoughts? Just yeah, you're good.
Hi, Amal. It's Irfan here.
Hey, everyone.
Great presentation, by the way.
Thank you.
Do you mainly trade minis, or you trade like micros, or you trade like any
I trade many micros most of the time.
micros most of the time? And what's your position sizing like starting position?
So it depends on my account size. Like, as I said, I trade prop firms. So I
Yeah,
trade
yeah.
50,000 account. I also trade 150K accounts. So if it's a
Mhm.
50,000 account, I start anywhere from like 5 to 10 micros, and then might
Okay.
scale up.
Yeah.
But if it's sorry, yeah, if it's a 50K account, I start with 5 to 10 micros. If it's a 150K account, I do size up more because I have more drawdown. So I start with maybe 10 20 micros.
Okay. Okay. Got it.
Yeah.
Thank you.
Oliver, your question.
So, so are you scaling into your position, or are you doing all in, all out?
Well, it depends. Most of the time I just all in, all out. But if the price action is really strong in my direction, like for example, it breaks the high of day and comes back to retest the high of day level, I might add in, right? So I like recycling it. Like I take some partials, but if I see it's moving further, I do scale it because I have some profits to fall back on as well. So
Okay.
it kind of depends, yeah. But most of the time, I just like to just go in once. But if it's really trending in my direction and I see, I have that bandwidth or that profits to fall back on, then I do scale in.
Okay. Another question.
Yeah.
On the fib, there's your fib tool. Is it the normal default settings, or do you have adjustments on it?
It's just the default settings. Yeah.
Okay.
The only thing is, I remove any of the other fib lines. I only keep these two levels
Okay.
because the other line just confuses me. So yeah,
Yes.
it's
Okay.
just
So
yeah, trading view and the default settings. Yeah.
okay. So you made the adjustments just on the other lines. I noticed. All right. Great. Thank you.
Yeah, no problem. Fadi, you want to go?
Yes. Hi, Amal. How are you?
I'm good, thank you. How are you?
Thanks for the presentation. It was great. I love the simplicity of the whole thing.
Thanks.
I wanted to ask you, do you always look at the volume to take your entries?
Good question. So if for the first model that happens around 10 to 10:30, I don't really look at the volume because it's very like it's not that clean, like because it's in the initial part of the session, right? It's the price action is fast, and so volume is not always, it doesn't always give you a confirmation.
Okay.
But for the second model, I do like to look at the volume, and most of the time it works perfectly fine because if you look at those examples, I'll upload the slides later, but you can go ahead and look at the examples later. For the second model, the price action really gives you a confirmation along with the volume because when the price comes, if it's trending downwards,
Retraces?
yeah, if it's trending downwards, and when it retraces, right, you can see the volume decrease on. I can just show you maybe some examples again. Volume. Yeah, like so you see, so when the price retraces here, right, you see how
Yeah.
the volume is decreasing like that, like that, right? And look at this beautiful, like this is like such a slow volume on that white candle, right? This is what I'm looking when I'm taking the second model, right? But it does not happen always. But I do like to look at it.
And
But
model
again,
too. Okay.
yeah, but candlesticks is what I go with. Volume is just an add-on, like a confirmation. If I see, maybe if I see a volume confirmation, I might size heavier, like things like that.
I see. I have a second question. Do you look at the trend, the overall trend, or you don't look at that?
Yeah, you're asking good questions. Overall trend, I
No,
usually,
tell you why, because I'm actually trying the same strategy, and it's working pretty good as well. But
yeah, it's
so yeah,
it's amazing. Like I wish somebody told me this when I started trading. The amount of time and money and effort I wasted in other strategies is insane. No, I'm
yeah,
not saying everybody
yeah.
should trade this, but it's if you're starting out, right? If you're struggling to get profitability, this is it, right? Like it's beautiful. It's very simple.
Okay.
Like it's very hard for you to not know your setups, right? You just work on your discipline. But to
Yeah, I
answer
like the
your question,
simplicity. Yeah,
yeah.
yeah.
So to answer your question, are you talking about like larger time frames, like
Yeah, like
probably?
maybe like a day before or 2 days. Are you looking at the whole trend or the like
Yeah.
does
So
do you look at it at all or you don't look at the trend at all, or is it
yeah,
something that will help you or
I do look at it. Like I do look at the 4 hour time frame or 1 hour time frame to see how it overall trending, right? I
Mhm.
also like to look at some of the like, important levels. Like if the price touches twice or thrice on the 4-hour chart, that is a good level for me to know that, like, for example, in this chart, right? If there is, let's say, a key level on the higher time frame chart right here, right? Now, if
Yeah.
the price comes to that level, I will take most of my partials because I know there is a level and the price might, you know, react to the level. So those things I do look at it. I mark those levels. I see the direction. But those are not my primary, like, decision makers. Like I just
Okay.
look at what is happening right now. Like I see these beautiful setups. I take it. But even if the time frames are not aligned, that I'm okay with it. But I do like to see, just to mark out like important levels so that I know my profit taking levels, so things like that.
Okay. Okay. Thank you very much. Thank
No
you.
problem. Okay, second. Do you trade any other setups? So I I try my best to just stick to this setup. 90%, 90 to 95% of the time, I only trade this setup. The remaining 5 to 10%, I take some shots. When the price keeps going and going, I do have it. Like I like to trade. You know, I like to short stocks. I mean, not stocks, like in this case futures, but I like to short when it's actually um, really high, and then I see like an inverted hammer, or on the 30 minutes or 15 minutes. I do like those setups. Sometimes I do take it, but I tell myself, I need to like just focus on this. So 90% I stay focused on this step, but the remaining 5 to 10% I do take some short trades based on the 30-minute or 15 minutes candles. Yeah. Could you explain how you find the 10 and 100% fib lines as price makes new highs? What do you find as price makes new lows or high during the day? Um, so you just draw, like, you just draw it using, like, okay, let me try to see if I can show you an example. Not sure where I choose this. Okay, I'm not able to change. Okay. Okay. Can you see my trading screen right now? Yeah. Okay. All right. So how I would, so this is MES today, right? So if I, okay, so this is 9:30, right? So if I'm trying, okay, let's say, I'm looking at this and the price is trending higher, okay? So this is my fib retracement tool on the trading view, right? I just mark. So if it's trending higher, I just go from here, like from the low to the high. Okay. So one is here, zero is here, right? So what it means is, yeah. So yeah, this is pretty much what I do. So the price comes here. If it comes back and retraces, this is a 50 level. This is a 61.8 level. This is one of the examples that I put in the presentation from this example from today, right? Where I will not trade this trade just because of this candle here and the higher volume. Yes, volume. Yeah. So yeah, this is how I draw it. If the price is going downwards, like, for example, you want to see this retracement here, like you want to check out this. This is how I would draw it. Right? So you see this, like it comes here. it touches and kisses the fib zone, and then off it goes, right? But this is not like I'm just an example, right? Like I wouldn't take this trade, but like, yeah, this is how I draw the fib lines. You just have to make sure that when the price retraces, your 61.8 should be um, above your 50% when it goes down, and the 61.8 should be below your 50% when you're trying to take entries on the long side, right? Like that. All right, I hope that helps. What else? Can you clarify when you mention 1 to 2 trades a week? Is it model 2 only? How many trades do you get in model 1? It depends. Like this year has been good. Like again, I just started trading these setups just about 3 months back, right? So I've not actively traded for a very long time. But 1 to 2 trades, what I was talking about was model 2, because that's what I back tested like relentlessly. I've spent hours back testing that model. Model 1 is something newer to me as well, but I've been seeing that lately happen most of the time. So I'm not sure exactly what number to give you, but that's something even I'm looking into backtesting for at least 2 years, last 2 years, to see the frequency or the win rate. Shivan, I also use a style of measured modes. I'm just using options. I may look into this futures instead. Yeah, sure. Like I'm sure this will, this works for like stocks as well. But I'm not sure, like because I've not when I traded stocks, I never used this model. I had like all kinds of other strategies that I was using. So, but I'm sure it works too. Like I've seen some of the times when Tesla, or, NVIDIA do these things. But yeah, I've not traded those with this setup. So yeah, we always like if you are to trade these models, just make sure you backtest. It's good to backtest with all the AI edge full or things like that. But I do like to do it manually. Like yeah, it takes a lot of time. I've spent like 4 or 5 hours a day in the weekends doing this, but the good thing about manual backtesting is it gives you that clarity of price action and volume, right? If you go to other softwares, you will get the information quick, but you don't know what's happening behind, like the candlesticks, the volume, like you don't know. You just know like, oh, okay, it will give you a percentage and things like that. But I would recommend backtest manually to get more conviction on your setups. um SPY was a decent setup strategy from time to time for the but these look at the strategy. And make that good. All right, yeah. So yeah, 10 7. Yeah. It's good. But what am I thinking? Have you backtested this on MES or MNQ? I have backtested this on MNQ right now. I just finished doing that on MNQ, but I will be doing for MES as well. So that is something I have to do for the last year for MES. Once I finish that, then I want to do it for last year, which is 2024 for both MES. So I have a lot of backtesting to do. Just working on it. Why is it 61? Why is it 0.618 for you 11? Well, it's just the fib golden zone, right? Like if just let me just show you this here. Yeah, if you just go like to this fib retracement settings, right? This is all the default settings. Like I've not changed any of these settings here. The only thing is, I don't want these extra levels to be, if you keep all the levels, this is how the chart looks like, and I don't want to look like this, right? So I just remove everything else except the 50 and 61 point. Why exactly 61 per year? I don't know. Like it's just I guess it's the standard, right? Like I don't know. Yeah. Everything else, 3% pullback with max tolerance, 11%. Okay. All right. This might not fill the scope of your presentation, but can you briefly chat about your problems journey, how you got started, how many funded accounts, and tips? I guess we need another webinar for problems, but I'll briefly I'll briefly go through it because I've had some others as well asking me about this. So maybe we'll ask how we can get another webinar for problems. But I'll quickly come back to that. Let me just finish anything related to this so that but I'll come back to that. Can you talk about how you do your backtesting? What tool do you use? How do you record trades for stats? So I use TradeZilla. I, I think I pay about $25 or something per month for that, but but it is very helpful for backtesting. Like that's all I need for backtesting. So I like the tool. I like the detailed report that it gives. So yeah, just try out TradeZilla. I'm sure you like it for backtesting. Then you can record trades, you write notes, stats, everything on that. Not sure if you have mentioned this. Do you only work with 1 minute time frame? No. So I for these setups I look at five. So I have 15 minutes, 5 minutes, and 1 minute opened up on my screens. 15 minutes is just for like a reference, but what I look at is 5 minutes and 1 minute. So I want to see how it reacts on the 5 minute and 1 minute. Like most of the time, it gives you good setups on 5 minutes, but if it's not clear on the 5 minute, I zoom in for 1 minute and see how it does react. Okay, that's about it. So yeah, so about prop firms. If you don't have any more questions on this topic, I'll just go through prop firms. So prop firms I started, as I said, because I didn't want to invest my own capital. I was not confident of doing that. I tried smaller size. So I went in a drawdown about 5K, and then I was like, okay, maybe I'm not ready for risking my personal capital. That's when I heard about prop firms. It was new to me. I've never traded futures before, so that was also new to me. So the first time I traded futures was in a prop account. I started with Top Step. It took me, I'm just being honest, it took me 2 months to get my first payout. So if you're trying to like get a payout, like if you're trying proper, you're not getting a payout, it's okay. It takes time. If you're getting it in the first attempt, well, you're very good. Because it took me 2 months, no kidding. Like I had blown up accounts, I had to find a way. Like at that time, I didn't even have a clear strategy or like what I discussed here, right? I was not using any of these models or anything like that. So I was not very confident about what I was doing. I felt like gambling. But then slowly, I understood. Take less trades. Take it easy. Have a fixed rules. I worked on that, and then eventually I started getting up payouts. But when I started getting, it was quick. Yeah, in about a month, I've made about 25K in payouts. That was after the 2 months of drought when I didn't have a single payout. So yeah. So if you are looking to trade prop firms, I would say start with one account, right? Start with one account. Take it slow, take it easy. Try to get one single payout. Once you get a payout, then you buy some more accounts and try to scale, right? Don't go and buy 10, 20 accounts and just blow up and like lose money, right? If you're somebody who's trading in sim, or if you don't want to risk your own capital, I don't know why you would not try problems. Like honestly, like you spend like $100, $200, right? For an account, and they give you a drawdown of somewhere around 2,000 to 4,500 drawdown that you can lose, right? And if you lose, you're only losing $100 to $200, right? That's it. That's all you're losing, right? But on the flip side, if you make money, you actually get real money. Like the problem's paying you like $5,000 in a single payout, right? There's my funded futures paying you $100,000 in one single payout, right? And the account costs like what, like $150 to $300, like yeah, like why would you not try it? Like honestly, like if you're somebody who are like a pro trading, like your own account, and you're profitable, and you're making good money, oh, that's good. Like you don't need to trade prop firms. But if you're starting out, I don't know why somebody would not trade prop firms. Give it a try. Like at least it worked for me. Like I'm so grateful that prop firms exist. Like I couldn't have imagined my trading journey without them. Like I would have blown up my whole savings if not. So yeah, give it a try. Don't go and buy a lot of accounts. Buy one account. Doesn't matter how long it takes. Get your payout. Then you buy two or three and you try to copy trade. And yeah, like I know people who are like making 100K plus a month just trading prop firms. Like there's a lot of prop firms you can scale. You can copy trade. You can do all kinds of things, but just start slow. Take it easy. If you need any help, like feel free to reach out to me. Like I can try my best to help. Any other questions? Anything else? Okay, I think it's good. Um, Thank you for your presentation. Do you mind if I ask you which problem you're working with? So I started with TopStep. That is one firm that really helped me. Like to I like the rules. I like the trading platform. Like this charts that I just showed you. Like on the fib levels that I just drew. That is a TopStep platform. I've got my max payouts. I think I've got about 35,000 just from TopStep. So yeah, I like TopStep, but I've tried some other prop firms. Like I have funded next futures that I'm trading right now. I like my funded futures. So I'm exploring other prop firms as well. Um, but yeah, so I do trade like a couple of other prop firms too. Oliver, you have a question?
Have you traded Model 1 and Model 2 ever, like in the week, or you just stick to one model?
Oh no, I trade both. Like if I see a setup on Model 1, I take it. Like if Model 2 comes up, I take it. Like it doesn't matter. Like if I see a setup, I take it.
Oh, okay, great. All right, great presentation. Thank you.
Yeah, no problem. Would you please write down the names? Yeah. Okay. Okay, I'll just write down. Yeah. So these are some problems. Yeah, just text me. I can guide you to some of the good problems if you want. D your stand. Okay. All right. Any other questions? No questions. We're good. Okay. Yeah. You go ahead. You can ask questions. Yeah.
Hey, Amal, thank you so much for the presentations. One question here, you might have already repeated this, but for the two level your drawings, for point five, say you mentioned that you look at the levels as a transition point or breaking point, like to go up or down. Then what about a 0.618? What do you use that for?
Like you mean this level here, like this?
Yeah.
This is just like so basically like you see the price coming here, and when the price pulls back, I don't want the price to go above 61.8, right? The moment it breaks 61.8, the setup is no longer valid for me. So this zone right here is just like it's a zone where I will take a trade if the price reacts in this level and then tries to come back down, So the 61.8 it's pretty much for my stop loss. Most of the time my max stop loss is above this level, right? Unless if I'm heavy size, yeah, I will reduce it to the wick, just above the wick. But this level gives me an indication that if the price breaks 61.8, that's it. I'm out. Like I'm not gonna take the trade, right? Like if this comes up, breaks the 61.8, I'm not taking the trade. So this is the zone where I want to see the price react, and then ideally, give us some wicks like this for the entry. So that's why I pretty much use this level. That's what I meant earlier by max tolerance of 11%. Oh yeah, okay. 50% of the best rejection price. Yeah. So as Shane said, it's kind of like a tolerance, right? I'm looking for 50%, but I'm willing for the price to go to 61.8% with 11% tolerance. Thanks, Shane. Yeah. One more question. At open, what time frame chart are you looking at? Are you executing using the same time frame? Do you keep drawing fib levels to see the pullback in the golden zone? I don't like, so basically at the entry, I want to wait for the first 15 minutes, right? Initially, I used to jump the gun, take trades even before it actually forms the 15-minute zone, and I would get chopped up, right? Like, and I decided, like, I'm not touching the first 15 minutes. If the price decides to go, let it go. I'm not gonna take it, right? So I wait for the first 15 minutes. What time frame I'm looking is 5-minute chart. So I look at 5-minute chart because I think 1 minute is like, it's too much for me. Like, price moves, comes, forms away. There's a lot of things in the first 30 minutes of the open. So I'm looking at 5 minutes. Once I see the price break the 15-minute zone on the 5 minutes, now I'm watching for a pullback to the 15 minutes. So yeah, if the price keeps moving up, or keeps going down, I adjust my fib levels. I already have my fib level drawn, right? I just adjust, and I know where is my golden zone. And then once the price comes back, like once the price pulls back to my fib level, which is the golden zone, that is when I will look into my 1-minute chart to see my entry. Like, so yeah, 5-minute time frame, and then once the price is closer to your golden zone, then you look at the 1 minute and see if you can get a good entry. All right. Okay, any more questions? Just right on time. Yeah, if not, thank you everyone for joining. I really appreciate it. I think Avi is not here, but I do want to thank him for giving me the opportunity. I've never thought I would be able to present it like that. Avi he has changed the way I trade, and I'm very thankful to that. And yeah, thank you. All right, have a good day, everyone. Thank you, Zach, for helping me with the recording. Cheers.